Hello and welcome to the annual general meeting of CapitaLand Investment. I'm Mark Lowdy and our sketch artist Vanessa, who's going to turn our words into pictures, and you'll be able to find her masterpiece on the CapitaLand Investment website in the very near future. Now let's talk to Chee Koon, and what a year it was. Separating the development arm from the real estate investment management arm, you've had a very big year. How's it shaped up in the first 6 months?
Well, time has really flown by very, very quickly. 6 months felt like 10 years. It's been very, very busy. I must say that 2021 was a very big year, a milestone year for CapitaLand, for us to do the restructuring. Just a very quick recap. The reason why we had embarked on the restructuring was because if you trace back in the history of CapitaLand, we have always been trading at about 25 to 30% discount to book value. We have built up, apart from a development business, but a nice asset management business. But the asset management business is not appreciated by the investors. And that's why we had embarked on the restructuring to privatize the development business, keeping the asset management side of the business listed, which comprises the REITs, the private equity funds, and the lodging management. Well, I must say that the market has spoken. So far, the share price has done quite well, at least from our point of view. Last 6 months, of course, has been very, very busy. Apart from executing the business as usual, we've been strengthening the team, building up capabilities in the private equity space. But it's never just about bringing in people. It's about making sure that the new team members share the same vision, have the same collective value system, make sure people work well together. Must say that early results have been quite encouraging, and I believe that with the team in place, we should be able to build on the solid foundation and to see greater results going ahead.
And of course, you've mentioned the share price has already shown those initial results. And your financials, how have they been positively impacted by the demerger?
Well, many people may have forgotten that last year, 2021, was still a year where we were recovering from COVID-19. There were pockets of lockdowns in the markets that we were operating in. And actually, we still had to give rental rebates to some of the tenants to make sure that we help them along in their businesses. I think we did a credible set of results, delivering PATMI of more than $1 billion. I think more importantly, we had a very healthy gearing. From now, it's a gearing of less than 0.5. And I hope that the shareholders at least will be happy with the dividend that we are proposing to give, from 9 cents in the year before to 15 cents this year. Comprising mainly two parts, 12 cents for our usual dividend and 3 cents of special dividend to make up for the drop in dividend for the year before.
And also in terms of debt, you mentioned certain ratios. What do we as shareholders do with those numbers? What is the implication of the fact that you've managed to pare down your debt to equity ratio?
Yes, I think that the company from a financial standing has never been stronger than ever before. We have a healthy balance sheet, meaning that if you look at the properties that we have, they are all income producing. No more lumpy development earnings that you need to be worried about. From a cash flow perspective, strong, and we have ability to gear up as and when we need if there are good opportunities. So I must say that the company is definitely in a much better shape than before.
Looking beyond 2022, what sort of opportunities are on the horizon?
Well, we are in Asia. My own view, and the view of my management team, is that Asia is going to be the main area that presents growth opportunities in the next few decades. And CapitaLand Investment, and traditionally known as CapitaLand, we built up our track record, our reputation in Asia. So Asia Pacific, huge opportunities. The important thing for us to do is to build up much stronger team. Local teams that can source good deals that are off-market, below replacement costs, be razor focused in terms of creating value for every asset or portfolio of opportunities that we have acquired. Make sure we deliver good returns for LPs, for unit holders. My own view is that if we stay razor focused on creating value, delivering good, consistent, high quality earnings, we should be able to build a big AUM business. But the fundamental foundation must be delivering consistent, high-quality earnings for LPs and unit holders.
LPs are limited partners. They're part of the venture capital part of the business?
I would say that they are the investors in our private equity funds.
And you've talked about some of the geographic implications. Obviously, Asia, the big growth areas. What about in terms of the different types of asset classes? Because obviously people might know CapitaLand for shopping malls and residential, but you're so much more than that.
Yes, I mean, you will not see CapitaLand Investment doing residential development in the traditional sense anymore. We will do rental housing, corporate leasing type apartment, service apartment, shopping mall, offices, integrated developments. There are interesting opportunities in logistics in business parks area, and these are capabilities that we have bolted on when we merged with Ascender Singbridge a couple of years ago. And the other interesting asset class that we have built up capabilities is data center. I mean, I think that everybody is now using 2, 3, 4, 5 devices. The demand for data is just going to continue to grow. And so data centers is something that we are focusing on, in Asia Pacific, because that's where our strengths are, where we believe we can find good assets, be able to operate the data centers or work with strong operating partners in markets where we are not able to operate those data centers ourselves. I think there are good opportunities in Asia Pacific.
Of course, we can't just focus on the opportunities. There are also a few risk factors about, and when you just look at the current headlines, you'll see all about COVID. Here we are in the 3rd year of COVID. That's still a factor. Oil prices are rising, interest rates set to go up. What are some of the key risks that are keeping you awake at night?
I think the operating environment is going to be very challenging for all organizations, be it governments, companies, NGOs. It's going to be the same. It's going to be very complex with all the risks that you have highlighted before. But the key thing is, my own view is, you need to have a good, strong team, a team that can work well together, strong culture, being able to fight the trenches together, be nimble enough to be able to navigate and be able to find opportunity amidst the crisis. I mean, if you recall, in the last 3 years, we first did a merger with Ascender Singbridge. It was one of the biggest corporate transactions in the history of Singapore. We put the two companies together. I would say that the merger was done quite successfully. And before we could get the merger done, we had to deal with COVID-19. And it was during COVID-19 that we had proposed and completed the restructuring. And the view that the management took at a point in time was that we should never waste a crisis. How we should leverage on crisis, on risk, to better position the company for the future. So with the restructuring now done, even during COVID period, I must say that the whole company, CapitaLand Investments, is definitely much better positioned to compete with the big global players in time to come.
One of the other headlines, of course, that we keep seeing is about sustainability, climate change, and so on. And you have a 10-year sustainability master plan taking you to 2030. Yeah. How's that going 2 years in?
The CapitaLand actually started the sustainability journey more than a decade ago. We were one of the first few companies that launched the sustainability report, even before there was a requirement to do so. So I must say that sustainability is in our blood, it's in our DNA. Because apart from wanting to make sure that we do well financially, we want to make sure that we are a responsible corporate citizen. We make sure that we are responsible for the environment, and we make sure that we continue to do good and make a positive impact to the communities that we operate in. So sustainability will continue to be very important. Of course, we came up with a very aggressive 2030 sustainability master plan. If you study the details, you actually will find that we will not be able to achieve the targets set based on the technology that is available today. But we are not giving up. We set up an innovation fund to work with technology partners, work with different companies to look for solutions, because we believe that we as a company, as we continue to extend our footprint, as we continue to grow our business, we have a responsibility to green the portfolio, to make sure that we contribute to build a world that is greener, that's more sustainable for the future generation.
One of the things that strikes me about our conversation so far is how many times you've mentioned people. And obviously, at first glance, you might look at a real estate investment management firm such as you are now and think of buildings. Can you take us into the tent a little bit about the talent and the people discussion that you've raised?
Fundamentally, I mean, anybody can own real estate. You can have two buildings next to each other. They can have very different outcomes. And the outcomes are different mainly because of the work that's done by the people that we have. So fundamentally, I believe that every good business, every organization is only as good as the people that we can have. So I'm extremely focused in not just in attracting talent, but in attracting talents with good value system, because you want people with the same vision, with the same value system. We are going to be a company that's very global in our footprint. And the thing that galvanizes us must be the value system. So it doesn't matter whether you're in the US, whether you're in Australia, whether you're in China. You're guided by the same moral compass, by the same value system in the way we treat partners, in the way we look for projects, in the way we deliver returns.
Finally, before we let you get started with the AGM, any final comments?
Well, just to remind everybody that CapitaLand Investment today is not a finished article. There's still a lot more things that we need to do. I want to thank the investors or the shareholders for your patience, your trust and your support to allow us to go through the transformation journey. I think the early results in terms of the share price, I hope, is testament and at least give you early comfort. But there are many things that we want to do. We are in Asia. We are committed to want to make sure that we build a strong team, to build a company that is not just strong in Singapore, but to be a strong company globally. We have a different mindset. We are here not to grow, not to try to make a Singapore company trying to go global, but we are here trying to grow a global company that is headquartered in Singapore. It sounded like the same, but they are actually quite different, because what we are trying to do is really to build a global practice with the best SOP around the world to be headquartered in Singapore. Because the idea is to really to compete with the strongest players globally.
Thank you again for those candid insights and all the best for your AGM. Group's Chief Executive Lee Chee Koon. And now it's over to Grace Chen to kick off the proceedings.